Lowe's and Home Depot are some of the largest sellers of lumber and lumber products in the country. In fact, in 2021, they sold a combined $23 billion worth of lumber. With all that lumber being bought and sold, they have a pretty good idea as to where the market is and where it's going. And in this video, I'm going to tell you what they're saying about lumber prices, so stick around. Lowe's and Home Depot both recently held their annual earnings calls for last year. This is where they describe their performance for 2022 and talk about challenges as well as opportunities for 2023. It's also a time for industry analysts to ask the CEO, CFO, and other executives questions about their business. In both calls, there was a lot of talk about lumber prices and where things are headed. And in this video, I'm going to tell you what they said. Let's start out first with Home Depot. One of the first things they talked about on their call was how they started out the year doing okay, even though inflation was high. But in the second half of the year, they saw the combination of inflation and the sharp decline of lumber prices over 2022 put pressure on their bottom line. Here's what they said, taken directly from the earnings call itself.
Throughout most of fiscal 2022, we observed a resilient customer who was less price sensitive than we would have expected in the face of persistent inflation. In the third quarter, we noted some deceleration in certain products and categories, which was more pronounced in the fourth quarter. This, along with the negative impact from lumber deflation, led to fourth quarter comps that were slightly softer than anticipated.
When they talk about fourth quarter comps, they're talking about the comparison of the fourth quarter of 2022 to the fourth quarter from the year before, from 2021. Companies do this kind of comparison year over year to benchmark against previous periods and see how well they're doing. With retail being a very cyclical business, it's really important to do this similar period comparison so that you can match up similar times of the year where you may have more business than others to similar times of the year. You can't necessarily match your fourth quarter, which is when Christmas is, to your first quarter, which tends to be much slower. Now, when he says lumber deflation, he's talking about the sharp decline in lumber prices over 2022. He addressed that in a bit more detail later in the call.
And it's been a very turbulent couple of years in the lumber market. To give you an example of what we faced in the fourth quarter on the framing side, lumber was $420 per thousand on average compared to $886 on average in 2021. To put that in retail dollar cents for everyone, a 2x4 stud, which is one of our top unit movers in the business, retailed on average for $3.40 in the fourth quarter of this year. Last year it was over $5.
Now he again is speaking about the drop in lumber prices. He then went on to say this.
Now, we did make some ground back on units, so you could say that, when you see a lumber market depressed or normalized, you see good unit productivity and you see good overall project business. As you look forward into the front half, that same 2x4 stud was over $10. It's now $3.50. So we'll see good unit productivity and certainly an opportunity to drive more project-related business.
Now, what he means by that is that they expect the decrease in lumber prices to drive more business. Now, in normal economic situations, lower prices does generally lead to more sales. But the question this time is whether or not we are in a normal economic situation. We'll talk more about that in a bit. Now, as I mentioned before, in these calls, analysts from large investor groups also have an opportunity to ask questions. An analyst from JP Morgan asked this.
Can you share the puts and takes on the cadence of 23 from a top-line perspective? You have DIY versus pro. You've got tough lumber laps in the near term, but you also have an easier spring lap. And so how are you thinking about the cadence of the year? If you sort of did a 0 in 4Q and you ran seasonal, you can get to a lot of different outcomes. So how are you thinking about the cadence? And just to clarify, is the 100 basis points of lumber headwind in the top line guide?
Now, there's a lot of business jargon in that, but basically he's asking for them to give him some guidance on how they think their business will do compared to last year, considering the volatility in lumber prices. Here is how Home Depot responded.
Right. So, Chris, our guidance assumes that we'll comp slightly lower in the first half than the second half. The lumber pressure we called out is sort of outside of guidance. There's so much volatility in that we would not want to put that in guidance. There is 100 basis points of pressure to the year if lumber remains at current prices. that pressure exists predominantly in the first half.
Basically, he is saying that lumber has been volatile and difficult to predict, and there is pressure on the company's profits because of lumber prices. The lumber sitting on the shelves right now was purchased at higher prices earlier in the year, but because of competitor pricing and lower demand generally, they have to keep their prices low, which is what's putting the pressure on their bottom line. This is the exact opposite of what happened when prices were raised. They were able to buy lumber at lower prices, and by the time they got it in stores, retail prices were higher, and so they increased their retail prices and made a fortune on the difference. So don't feel bad for them. This is just the downswing of that cycle. He also made the comment that this will be predominantly in the first half of the year. This is because as lumber futures prices or the wholesale prices that they pay stay low throughout the year, they will be able to sell out of that higher priced lumber that they bought earlier in the year and get lumber on the shelves that actually cost them less. This will put less pressure on their bottom line, and they'll be able to be in a better position to lower prices on lumber if they need to. To me, that means that they expect lumber prices to normalize throughout the year. Now let's talk about Lowe's. Now Lowe's made a very similar comment on their call. Here's what they said.
I would like to spend a moment discussing our expectations for first half performance, which is an easier comparison from a sales perspective. However, when we consider the impact of lower lumber prices, we are expecting a nearly 300 basis point headwind to sales in the first quarter and a 100 basis point headwind to sales in the second quarter. Given these impacts, we expect our first quarter sales comps to be below our full year guidance range and our second quarter sales comps to be above our full year guidance range.
Lowe's discussed it further in response to an analyst question about why they had adjusted their guidance down for the first half of the year.
At a high level, it's lumber deflation. That pretty much sums it up. As Brandon mentioned, we're going to have 300 basis points of headwind in Q1 and 100 basis points of headwind in Q2. Going into 2023, we looked at the first half of the year as our easiest compares. That remains, but when you throw in that lumber deflation, that pretty much sums up what's different between what we discussed in December and what our guidance is.
So they again are expecting what they call lumber deflation to impact their business in a negative way in the first half of the year, just like Home Depot. Later in that call, another analyst asked perhaps the most direct question in regards to lumber prices. Here's the question he asked.
My follow-up question, just with regard to lumber prices. So, you discussed here, and we get it. There's, this is kind of pass-along dynamic when prices decline. That's a negative for sales. But if we gotten to the point where lumber prices have declined so much, that's actually becoming a potential stimulant to demand. I don't know if you're seeing this in your business or maybe in some of your polling of your professional customers.
So basically, his question is, will lumber demand go up because lumber prices are lower? Here's how the CFO of Lowe's responded.
Yeah, Brian, I'll take that and again, kind of connect it to the guide. So our guide at the midpoint for lumber in particular assumes a normalized pricing environment, certainly considered to what we've seen for the last 3 years. And within that lumber assumption, as you heard in my prepared remarks, expecting headwind in both Q1 and Q2. And I'll call out also if that when we look at lumber pricing currently, if that were to play out across the remainder of the year, it actually puts another 100 basis points of pressure on the midpoint of the guide. But to your point, within that, we are expecting an offset in units, and there's potential that could be a stimulant for our business. But again, right now we're expecting and have considered at the midpoint of our guide just more normalized pricing and a slight rebound in units in the next year.
So what Lowe's is saying again is that they expect lumber prices to normalize this year, and there may be a slight rebound next year. Now, I agree with that sentiment, and if you look at the last few months of lumber prices, you can see here that the prices really have normalized. There is still a bit of fluctuation day to day, but the average of the past 90 days is around $420 per thousand board feet, which is fairly close to what it was in 2019. The average price of a 2x4 across the country is also hovering at around $3.25 to $3.50. Now, I don't expect that to change this year either, barring any kind of huge shift in the economy. Now, the last point that I want to address is the comment that was made at a few points in these calls when they make the assumption that lower lumber prices would be a stimulus, meaning that lower lumber prices would lead to more demand for lumber. Now, in a normal economy, that is generally how it works. If prices for a commodity decrease by a large amount, then you would expect people to buy more of that because it's more affordable. I don't think that's what's going to happen in this case for a few reasons. First, it isn't like the prices were normal for a long time and just recently decreased. Prices were exorbitantly high and have now come back down to close what they were before. That wouldn't really create more demand, in my opinion, but rather just allow for normal demand, what the demand should have been. The next reason is that most lumber demand comes from the housing market. And with housing prices near all-time highs and interest rates at the highest rates in decades, the ability of people to buy new homes or get home equity loans to remodel their existing homes is diminished. And so to me, that means that lumber demand in the short term will remain pretty flat. So all in all, what did we learn? Well, decreasing lumber prices have impacted the bottom line for companies like Lowe's and Home Depot in a negative way. But the general consensus is that demand will normalize throughout 2022, and I agree with that. There is some thought that prices could go up in 2023, but for me, I don't necessarily see any immediate signs of that right now. That could change in the future. Now, the thought that demand will increase throughout 2022 because of the lower lumber prices, I don't see that as very likely, again, because of the housing market and because of the challenges that we're seeing in the housing market. Something really needs to change there before lumber demand increases overall. Now, I hope you found this video interesting. If you did, be sure to like the video and subscribe to my channel for more. Thanks again, and we'll see you in the next one.